Hello, hello, hello. Welcome to another ES Futures trading stream. This is a market update for today, Thursday, April 20. It is 12:30 p.m. We have a market that has been extremely short from the overnight. Overnight inventory has been very elongated to the downside. We have a trade that the trade was taking yesterday's late pullback low. That this pullback low was at the closing very low odds of being of the market remaining here. When the market has this kind of pullbacks, it is better if maybe the market, even if it's lower than this, is better for the upside, because it would mean it could the the odds that something happened inside there are more relevant. There are the odds of this kind of pullbacks exactly to one mechanical level is as such hardback is. It really increases the odds of the downside trade, and the trade is just this, taking this low out. The market has a really impressive downside extension. I don't consider this low to be quite exactly a a strong low. It has excess, but it was both. This is a mechanical low. It just weakened this low from this over for this trading day that we have double high, double lows here. You have a strong pullback here that was bought from exactly this level, and this low is just too close to this to me. From my point of view, um, I think this is what is holding the rally here. Now, in the upper side, the high is very weak now. It's getting weaker and weaker. We have too much in highs, another too much in highs here. So the odds that these highs remain there, the odds that this high are repaired are actually high. The market is lower. We have value lower. The market is getting it is traders are selling every single rally out here, but the high is weak here. It is what I'm trying to say is the traders that are in the market selling this market are very short-term traders. Again, nothing has changed. Everything remains like that. It has been like that pretty much for almost 1 year now. The market is having only this kind of traders, just trading money, not investing money. That high is being, that high is being repaired now. Now you have a wide POC, but value is lower. Um, the market comes back to this low here, and also it just took too much time here. What I was watching, the upper side was last. It was this overnight was sold from last. The base of the break is last, right there. Um, but being long is something I don't want to be, right? Because its market is lower. Traders are selling, value is lower, and the trend's to the downside now, right? The trend's to the downside. Yesterday, one time frame higher ended, so there's no more trend to the upside. We have the market is going to the downside. But that being said, there are many things to say. The market made a stand. The market there didn't even get close to March high. Right? It was bought from this level here. We have some mechanical level down here as well. This is a classical way to trade downside days when traders actually sell the rallies and take profits in the breaks. Yeah? Be careful not to buy the breaks and sell the rallies. I take profits in rallies is the opposite. And because it's a downside day, this is a day to the downside. More likely, most traders will be selling the rallies. Right now we're having a rally from what period is this? Is F didn't take previous period low out, and now it's as the high has been repaired here. Notice how the high has been repaired. We have excess in the high now. Now the thing is, if there's something to the upside here, I don't know why I have this level here. This was a previous breakout from weekly breakout here from someday here that I can. Oh, this one over here. No, it is. Can you see? I mean, who sells from that, right? It's just, but that was support in the last couple of days. Now it's being is resistance. You know, the market going through that level, risk that last bit to be taken can be taken. All right. Um, the bigs is the bigs. What's happening with the bigs? Big is low again, a little below 17. I don't have too much. Now this is a rotational market for me. Um, Trend to the upside. You know, you got A, B, C, and then D ended that the upside movement. And there's a lot of trade. You know, the amount of trading that happened around yesterday's low is really impressive. Multiple times the market has been bought and sold from that level. All right. If Now at this very moment, the market has re-entered the upper distribution of the overnight from the overnight. So far, what I have seen is maybe just the market doing a counter action. Yesterday, there was a counter action to the to the long inventory all day long. Now it could be the same thing, right? This market is doing a counter action to the again. We got short overnight inventory. I don't see there is more volume though today. Volume is increased, but the market doesn't have a a clear direction. All right, market doesn't have a clear direction, not to the upside, not to the downside. It is just there. When the market ends, when the market ends one time frame higher, which was happening in the morning, early in the morning, it advertises. They also having a rotational market increases actually. Right? Now, if this market is strong, if this market really has some buying here, the market shouldn't have any problem taking that that prominent overnight POC. That overnight POC is right there. It's actually quite close to the current high, to where the market is right now. It's really close, right? 4170, or where is where 4170? 4170 is right here. Okay, there's nothing here. I'm just marking this level. Where's this low? 60. Where's this low? 52, 52, 60, 70. Market repel these highs. Notice what is happening now. Has re-entered this range. Market re-entering this range. That is the opposite side of the range. And we have a downside day. What traders do when we have a downside day is traders sell the rallies. It is uh, this is the hardest thing of trading. I am not this kind of trader. I don't do this kind of intraday trades. What I try to see is I see what my trades take days to. Uh, I don't like this word. They take days to set up to form. As for example, yesterday was a consequence of what happened here, and the market make a new high here, and specifically being bought from this level, exactly to this level. This doesn't happen quite often. You will see, right? You will see. And the risk here, you have to take risks here, right? The risk that I am willing to take here could be maybe 4 points, and where this, I mean, if I had this trade, because I trade options, where the market can go, right? Where the market can go. Maybe to this low. I have this low market from a couple days ago since it formed. Uh, it seems far, right? When the market is up here, when the market was rejected up here, this low really seems very far away. And I didn't do anything here. I did some short yesterday at the when market gave us too high. I actually closed my position for a loss. But in the aftermarket, not in the after, in the overnight it was it was better to aim at this level. And once I'm clearing, the first objective was just cleaning this level here. That was it, and that was the trade on anything below this. Okay, granted, there is several. The market is weak. The market has changed. Yesterday we have changed in the market. We have clear rejection of higher prices in the upper side. That was pretty clear. I hope you have seen that yesterday. And even though I have a loss up here, I think I was too early. I think I was too early. I wasn't willing to go to use these options that expire today or maybe over the weekend or Friday, my bad. To do that, I was using daily options, yesterday's options to do that trade, and that's why I take a loss there. Today, um, I, actually, I didn't see much today. When the market closed the gap, it was a significant gap here to the upside. When the market closes the gap, I immediately start to see the opposite side of the yesterday's range. But the market just back and forth from this level multiple times. Notice how many times the market has come back down here. One, two, three, four. A strong market doesn't do that. Right? A strong market doesn't do that. Now, a weak market don't come back inside yesterday's range. There is something that could be going on here this could be just a counteraction to the overnight short inventory from the overnight and from the late break. Right? There is still supply. There could be supply there. Um, Very hard day to trade. Very hard day to trade. I don't know if you did something here today, but there's no clear direction here. The market was too short. The bonds have recovered. The bonds are leaving that danger zone that was the lower edge of that. Uh, how much? That's I believe is 1 month range that we have there. It was a very risky. I still think that there's a huge amount of risk on the upper side. But the bonds clearing, I mean, not clearing that level, but rather going to the upside. It kind of relieve the pressures in the market, but increases the risk to me because now we have four at least in 30 years in 30-year bonds we have four lows at the same level. Gold is back above 2000. Um, you can see the market kind of like paying a lot of attention to gold as well. There's a lot of negative news going on the stream. The fear of recession is here. Everything is painted. Everything, the voice on the street is negative. Everything is negative. That's one thing. Um, I don't trade. I don't trade news, but also I don't. I try not to trade in a vacuum. I try to be aware of what's happening out there. When the market gives us a rotational market, like it's giving us today, there are more opportunities during the day, but these opportunities have what we can make actually is we don't expect to have to, don't expect the market to go longer distances when we have rotational days. That's not what happens in rotational days. You got a profit, okay, close your position, hedge your position, whatever, take profits, don't let the market go against you because that's, that's the risk of this kind of markets, right? We have more opportunities, but we make little take little profits on this kind of markets. Trying to be in sync with the market, right? Is one thing. Is what we try to do. We don't try to guess what the market is doing, but be in present and do what the market is doing. There's a lot of short-term trading here. A lot of short-term trading. I don't know why I put this one here, this line here. What this line is. 59.20. No, there's nothing here. Oh, this was this distribution here. When I marked when B came up to here, I didn't take it was such a small distribution here to not to take it. I didn't consider this high to be a good one. As I say, there's a weakness here. It's kind of subtle. I don't think many traders, especially small ones, can see this or are related to this. This low is also. I don't think this is a good one. It's so close. It's so close to this day's low. You got another level where the market was sold from 1, 2, 3 times here. But the thing is, when we have these lows, the market makes these lows, volume kind of like dries here, right? Dries. There's some here, some here. There's not taper here. The market can come back to repair these lows here. But it not necessarily had to happen today. Remember, we have rotational markets. There could be something coming down here, maybe close to this level. There could be something. This high has been repaired, but notice how much time the market took, how much time the market take to repair these ones. It repaired this high after two periods. It still want to repair this one. Right? Now we have three lows here. We don't have two. We have three lows here. How long this could take for the market to come back and repair this one? Today we have a day to the downside. Value is lower. The next thing for upside continuation, I would see maybe this level market getting into value area high, into value area from yesterday. If the market doesn't get inside yesterday's value, at least, or the market sells from that level, it is another sign. That's another sign of who is doing the trade right there. Very hard markets to trade. Please let me know if you have any questions. I don't have much to say here. All right. This could be a developed trade because this trade can take time to develop. Market coming back to check this one to repel this. Notice how this is weak, but it's not for example it's not like this like it was yesterday. The context, right? The context is what I try to see here. Everything is a series of facts surrounded by different circumstances. What the market is doing today is kind of it's like a copy and paste from yesterday. Yesterday the market opened to the downside with a gap to the downside. The gap closed the gap really fast. Today it didn't close it fast. It struggled to close the gap. And the market is heading. There is something up there, right? That the market can see. The market can see this last here, the overnight, this all this break coming from this high here. Right? Exactly to the tick here. There's a lot of shorts here. Very mechanical selling. Market is getting into this distribution, right? But yesterday it wasn't from the overnight. Remember, the overnight doesn't have too much volume. Yesterday was market was heading towards this area here, where 1, 2, 3, 4, 5 highs around this area. Market, as soon as the market took this high out, make a burst to the upside, give us a spike, give us excess, and boom, it just went down after that. It's a copy and paste, right? Traders do what works until it doesn't work anymore. That's it. They don't see more. Momentum traders don't see the context, don't see what is going on in the background. They don't put context to price. They just see the market going higher and just let's buy the market. Yesterday we reached that high. Today we're going to reach that high again. I'm not saying it will not reach the high. Okay, I'm not saying that. What I'm saying is if I'm long here, I will be very careful. I will be very careful again to have my stops very tight, to not let the market trading against the market. I will be trading against the market if I will take a long against the trend. All right, my trade has to work really fast if I do that. If it doesn't work, I'll try not to let the market to go too far from my position. Also, location. Where this market is coming from? Yesterday's low. Well, there's a lot of back and forth around that level. There's a lot of back and forth. The risk of that is it may not happen necessarily today, but maybe tomorrow or Monday, the market may come to this level or through this level, right? Because there's a lot of short-term trading that happened here in this area. It is just short-term traders though. Who buys or sell around these mechanical levels? Just short-term traders, traders like you, like me. Strong or long-term investment or long-term capital that's not the way how they trade. And also, I'm not seeing. Actually, I am seeing some. Um, let's check. There's some volume here in this area, but this is the ES, right? Okay. Why did I put this level, this red line here? Hmm, don't know. Don't know. Why the hell did I do that? It's coming from this day, maybe? No. Oh, it was this distribution. No, it wasn't. I don't know why I have this low here. Market entered. Oh, it was this. It was over. Oh, yesterday's value area low. All right. If there is something to the upside, right? If there is something to the upside, the market will form a second distribution here. You know, market will close this period G, which are like 5 minutes. Still 5 minutes more to go to close the period, and the next period will start to trade above G high. Not just that, it will not close the distribution. Closing this distribution, um, this is for me. It won't be a good sign for the longs, right? What the market yesterday, when the morning, we were telling the two signs that favor the upside are the market high made in the overnight and value being built inside Monday spikes. You have a spike to the upside on Monday, and 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 value was built there. What is building in this spike, around the spike, in the spike, inside the spike. Today is the first day that the market crossed the base of the spike and is building value below the spike. So many things here, so many things to be aware of. No. The bunch of the shorts, the bunch of the overnight inventory are in here. Okay, are in here. This was long liquidation. There was liquidation of all these longs from yesterday. Terrible day to the upside. Terrible day to the upside. Oh, look at this. The market has closed yesterday's distribution. We have two distributions here. The market has closed the distribution. Hmm. That actually targets the opposite side here. All right. But I don't want. Oh, look at this. Look at this high here. Look at this high. We got this high here, closing the distribution. It was sold from. Yes, that's what I had here. It was sold from this. What I don't want, if I'm long here, I don't want the market to come back inside. This is a breakout. It has breakout. The market has breakout. I took this high out, get inside these distributions, about to get inside value area. What I don't want is the market coming back inside this area here. Any questions, comments, answers, suggestions? I'd love to hear it. I know I say that all the time, but nobody wants to say anything. uh, all right. Okay. All right. If there's no questions, I guess I will call it a day. I'll call it a day. Um, Monitoring for continuation here, we see the market taking or getting inside yesterday's value area, taking overnight, taking overnight POC, and the ultimate destination would be last, you know, or even the late pullback low from yesterday, which is very close to halfback. Okay, all right, guys, stay safe. Wish you good luck, and I'll see you tomorrow. Bye bye.